Hello everyone, welcome back to another very interesting video on how to find the high probability intraday setups. Now this video is going to be very interesting because of two main reasons. First is that I'm going to share the best trading setups for the intraday trading. Secondly, these trade setups are for the Bank Nifty. Now why Bank Nifty is because Bank Nifty is very highly liquid instrument and widely followed instrument on Indian exchanges, which means that a lot of traders trade in Bank Nifty on a daily basis. And when you get an instrument where a lot of people trading day in day out in that instrument, you get the high probability setups very frequently. So on that note, let's just jump onto the presentation. So this is the thought process, which I use in my trading, and I would also call it the building blocks, because I use all these pointers as a guiding tool in my trading, and until and unless all of these points come together and present a very high probability trade setup, I just completely avoid taking the trade. So what are these points? Let me just quickly walk you through each of them. So the first one is price action. So of course, as a pattern trader, I use price action mainly, and I do not use any other trade setup. I do not use the indicators at all. So for me, the candlestick patterns and the price action is the first and foremost thing that I look for on my charts. The second is candlestick analysis. So we do it, the bar by bar analysis, and try to make a sense out of it, that where the prices might move, in which direction they can move. Second is trend analysis. So we know that most of the time, charts do trend in one way or the other. So mainly we have three kind of trends. We have the uptrend, downtrend, and the sideways trend. So not only the trend, but what we are looking for is the quality in the trend. And when we get that quality, we just jump onto that trade. Next is support and resistance. So that is basic technical analysis stuff. Support and resistance is the most important thing that you should know how to draw on your chart. Then we have the multiple time frame. Multiple time frame is another very important point. And in my view, in my personal view, trading without multiple time frame analysis is a pure gambling. So I need to know what is happening on the different time frames. So as always, I start with the daily, then I move on to the weekly. If I'm trading, if I'm taking the swing trade or a positional trade, if I'm doing the intraday trading or scalping, I start with the daily, then I move down to the hourly, and then to 5 minute or 2 minute. Then we have the moving averages. So this is the only indicator that I use on my chart, but I do not use it as support and resistance as most of the other traders do. I use them just to speed up my analysis. Now, how moving averages speed up the analysis? So just by looking at the slope of the moving averages, you will come to know whether that market is in uptrend or a sideways trend or a downtrend. Volume analysis, so it is secondary, and as we are going to take the trade setups in the Bank Nifty, so in the index chart you will not get the volume. So just it's just that we use on the mainly in the stocks when we trade them, not on the indices. But volume is something that comes as a handy tool whenever there are turns in the market, and when those turns are supported by spike in the volume, that's a plus, and that is what we mainly focus on. Then we have the broader market trend. So this is another very important point, very important guiding tool. However, we use it when we are mainly trading in the stocks. Now let's just jump on to the next slide. So this is a screen of I usually call it a spaghetti screen. because you cannot just see the the prices here. Why? Because it is full of indicators. I'm sure if you are following other channels on trading, you might have seen such kind of screens where people are using a lot of indicators. Now, I'm not saying that people should not use it. If if a trader uses it and these indicators works for him, that's great. I do not use them because I need pure prices to look at. I need pure price action because that is what works for me. And if you are a kind of trader who also want a clean charts, who want to read what is happening actually on the prices front, then this video is going to be something which you are looking for. So this is the screen of bullish patterns. This is a picture of candlestick patterns that I want on my chart before taking the long trades. So I would advise you to just try to just look the screen as much as you can, because this is the picture that is needed. And when you have this kind of setups or the patterns on the chart, that is when you should go and jump on to that trade, because these patterns are highly reliable, right? How can I say that these are reliable? Because these are the time tested patterns that works most of the time. As a trader, we know that there is no strategy, right? No system which works 100% of the times. So what as a trader, what we are basically looking at is the probability, the odds which should stack up in our favor. So in a sense, what is a pattern? So, or what these patterns can do for us. So patterns are something that gives us the exact entry points, or the right entry points and the right locations to put our stops, right? So they help us in that. Okay, so with all those little bit of education, this is the Bank Nifty chart, and let's just discuss what do we have here. So I have divided the screen into two time frames here. So you have a daily chart on the left side and you have a 2-minute chart on the right side. Now, in all the coming slides, I'm going to use the same combination. And in my opinion, this is the best combination for the people who have just started the trading, because in case of the scalping or the day trading or the intraday trading, as we call it, the less is more. And what do I mean by that? The less information that you have to process, you can take your decisions faster. So we are going to use two time frames here. Now, after trading for past so many years, I'm comfortable with trading from the 2-minute chart. If you have just started out and you are not comfortable with 2-minute, because 2-minute is a time frame where the inflow of the data is a little bit faster, which means that you have to process and analyze that inflow of data quickly. And if you think that your brain is not wired in such a way that you can process this much of data so quickly, do not use this time frame. Just go one time frame higher. So you can use it 3-minute, 5-minute, or even 15-minute. Okay, and as you gain experience, as you build up the process, probably you can come down and try trading from the 2-minute chart. Why am I using 2-minute? Is mainly because in a 2-minute time frame, I get better entries, and most importantly, I get a closer, a tight stops. Now, Bank Nifty is an instrument that moves 100, 200, 300 points in the direction very easily and very quickly. So an instrument which moves with that much of point very easily, you need a time frame that gives you a little bit tighter stop, so that if let's say the trade doesn't work out, you will not make a big loss in that case. So let's start. So we have this daily chart. Now let's see what is happening on the daily chart here. So we have a daily chart where we have this strong breakout from the nearby resistance, right? So if you can see what is happening on the before the breakout, so we have this little bit of consolidation phase here, and where we have a couple of selling days which were completely ignored or did not have the follow through. Now we have this very important candle here, which dipped down and took out the lows of the previous candles, and has come down nearly to its rising 20 MA, and which showed that bears were very aggressive on this particular day. But what has happened is that later on the day, the bulls gained the momentum and they just took the prices and push it back to its highs, and eventually made this candle as a bottoming tail bar. Now such kind of failure patterns, this is a failure pattern from the bear's point of view, because all the selling that came in that day has eventually got bought into by the bulls, right? If you can see, we have this very strong candle here. Let me just, yeah, so let me just find the spotlight for you. Yeah, so we have this candle out here, which has again breakout from here, and then so we have this this candle which has taken out the highs. So this was the first igniting bar that has started the momentum out here, and then we have a consolidation period here. And if you can just analyze the moving averages, they are pretty much aligned. So we have the 20 MA above the 50 MA and 50 MA above the 200 MA. Now the difference between 50 and 2 MA is is more than what it should be as an ideal setup, but it is still okay because we have the candle, and the setup is telling us that eventually the 200 will also catch up with the 50. So we have a clean breakout day in daily. Now what we have to do is we have to just jump on the 2-minute time frame and wait for the right setup. So this was the first candle of the day, and then we have a kind of consolidation near the highs. This is where some of the bulls got caught up here, and then we have a complete move down, which means that all this buying which came in the morning has eventually got sold into, and then we have another move up. So this is the kind of price action that tells us that we should ignore it, right? We should not jump on to it until and unless the price gets settled down. Now why am I saying this? If you see the kind of ranges that it has formed, and then the consolidation and then move back down, tells us that the price action is very whippy and sloppy, and we should ignore it until and unless we get a clean trend here. Now what do we have? That after this very strong momentum which has taken out the selling and resistance level, we have a consolidation phase here. Now this consolidation has came in after a strong move. Now one of the concept is, let me just find out the pen here. Yeah, so one of the concept is that after a strong move, if you have a consolidation at the upper 1/3 of that move, it is very bullish, and eventually it will shoot up to the upper side, and that is what has happened. So as a intraday trader, what we have to do is we need to buy this breakout here, right, where you can see this arrow. And where should we put our stop? We can put our stop below all this consolidation here, somewhere here, and which means that we will get a very tight, a closer stop, and which means that if this breakout will not work out and prices will move down, you will not have a very big loss here, right? Let me just clean this up. Then you have these red lines, which means that you need to trail your stops right after entry, taking the entry here. So this was the next pivot and you can put your stop here, right? Then you can put your stop even here. I do not mark the red line here, but you can take, raise your stop here. Then you can raise your stop here, and then eventually you will get stopped out around these price levels, right? With that, just jump on to the next slide. Okay, so in this chart, what do we have? We have this, a very strong wide range bar igniting move to the upside, which has, first clear this nearby resistance, and then a follow through of this igniting move has cleared the second resistance here, right? Now, after a very strong, momentum move, ideally we should wait for a consolidation. It could be 1 bar or 2 or 3 bars, and then we take the entry above that candle. Now that did not happen here. Let me just clean this up so that you can see it clearly. So after this wide range bar, we have the other bar which has taken out the high, so which means that now we have to wait. Then we have the third bar which is even moved higher, right? So we have now 1, 2, 3, 4 bars in a row which is continuously moving up. Now when you have a prices which is continuously moving up, then you cannot just chase the price here and jump onto the trade. So we should wait, and that is when we have taken the trade here. That is why we have taken the trade, because after these moves we have one resting day here, and then we have a breakout. So in short, it's a breakout trade that we are going to take here. Now, if you remember from the second slide where I have shown you the thought process that I follow for my trades, right? The purpose of showing that thought process is that when all those thought processes come together, you can take the trades very confidently and very comfortably. So what do we have here? We have igniting move, which means that we have a strong price action that has cleared the resistance, right? Now, after clearing this resistance, we do not have any strong resistance to the left remaining here, which means that we have a clear sky, right? And then we have a breakout. So this price action is telling us that there is a buying momentum which is building up in this market. So in such a scenario where you have multiple things which is coming together, you can take the trade just above the high of the first 5-minute candle here. So if you can see that we have this first bar here, this is the first 5-minute candle, which is a combination of 2 patterns here, which is a range expansion plus bottoming tail. So we have a combination of 2 things in one candle. Now, what does it mean? That we have a very long range, which means that prices open somewhere here, they dip down, and when they were here, it was a red candle, but then the bulls stepped in and they pushes the prices to the higher and eventually made it a range expansion bottoming tail. So all this tail tells us that this was the buying which came in in that time period. And then we have prices which just shoot up to the higher side. So we can take the entry above this candle. We can keep our stop here, giving it a little bit more room so that even if the prices comes down back, you have some room left, for your stop. Then you can just trail your stops whenever a pivot forms. So we have, kind of first pivot which has formed here. So we can trail our stop from here to here, and we can, raise it to here. And eventually when you will get stopped out around these areas, right? Okay, so now this is the third example, and this is to the short side. So we have a breakout failure bar. Now breakout failure or a failure patterns, when we have the failure patterns, these are my favorite. Why? Because they tells us that people, all those traders who have jumped on to buy this breakout have eventually got caught up. And when people got caught up in the wrong side of the trade, they are the first ones to just close their position, which will even more fuel this price action to move downside, right? But this is just the first piece of information. So we cannot take the intraday trade on this day. Why? Because we need more information. Prices have came down, right? We have a chart which is telling us that we have a downtrend market, but prices were trying to get stabilized around these areas. What does it mean? It means that it is trying to create a support here, and then it moved up. We have a gap up day, but eventually as prices pushes through the declining 20 MA, the sellers became aggressive again, and they just started selling the market, which made the prices move down further. So what do? We wait for the right setup on the daily time frame, right? Then you have this particular day which has taken out the lows of all this support which was created by the bulls, right? So this bar tells us that still this market is not in a downtrend. Do not think of going long yet. And then we just move down to the go down to the 2-minute time frame for the right setup to go short in this market. Now, one tip that I want to give here, it is not a tip. Basically, it is just a kind of suggestion that I would like to share, that until and unless you have the right picture on the higher time frame, never move down to the lower time frame to take the trades, right? So the professional traders, the pro traders, never move down to the lower time frames until and unless they have something meaningful in the higher time frame, right? And we do have now a good setup, a short side setup, and which is why we have moved down to the 2-minute time frame now. Now, what has happened is that we have a very strong momentum right at the opening of the market, right? So what we need to do here is that we need to wait for the prices to get settled down and show us the right picture before we jump onto the trade. So we have a very sharp move, then we have somewhat consolidation, somewhat stabilization here, but it has also got sold into. Now when this bar here has formed, now let me just clean this up. So this bar, which is on talking about right now, so this bar has taken out the lows, and then we have a small range green bar which is at the lower 1/3 of this big bar. Now when you have a strong move to the downside, like we just discussed a few minutes back, you have a resting bar at the lower 1/3, then we will take the position when prices will break below the low of this red candle, and which is what has happened here, which means that we have now moved into this trade, right? This is the first or the initial stop that we kept here because we wanted to give it a little bit more room. Now based on your trading account, if you can take this much of wider stop, you can of course go for it. And it is even advisable to have a wider stop, so that even if prices will whipsaw a little bit here, you will not get stopped out so immediately. And then once you're in a position, once the prices started to move into your direction, then you can just move down your stop and trail it, and this is where you get stopped here, right? So in short, you have captured a meaningful, a very decent price or the points, number of points in your trade here. Okay, so this is in this chart. What do we have? We have another breakout setup in the daily time frame. Okay, so now what do we have here? Apart from this breakout, you can see that we have a strong momentum move, and then prices have consolidated on the minor support area. Now what is a minor support? So let's say prices are making higher highs and higher lows. So when they came back and rest at the previous high, this is called a minor support area. And if they just moved down and came back to the prior lower high, this is what is a major support area, right? So what we have here in this market, prices have shoot up, they consolidated for a few days and they rested on the minor support area. Now we have few days here where prices have open gap down, right? Let me just clean this up. So if you can see this bar, it opened here, which means that prices open little bit gap down here, but this gap down has immediately reversed back up. Now this is a very bullish signal that something is happening in this market, but this is not the right time to place the trade, because we are still in a consolidation phase. There is no proper setup here. So we have to wait until the prices will either break out or they break down and give us a more clear picture. If you can see, we have moving averages which are pretty much aligned, and sloping upwards. So when this breakout has happened, this is where we need to take the trade, because we have cleared the immediate resistance. Now we do not have any strong resistance to the left, right? So what do we have on the 2-minute time frame? So again, if you have remember from the first example, which was the breakout pattern, we have a momentum move, right? And then we have a consolidation, right? So we will not move into the trade right from the first candle, because this is not a gap trade. Okay, so please remember, there is a difference in entries when you have a breakout trade and when you have a gap trade. So both of them have different scenarios, and so they present different pictures on the particular trading day. So we have to wait until this consolidation gets over. And if you remember again, we have momentum move, prices consolidation at the upper 1/3. We have to wait until this consolidation gets over, and it will clear the resistance nearby, right? So repetition is the key. The more number of times you will repeat the same concepts over a period of time, the more you will get perfect, finding out the trade setups. So we have a breakout here, and this is, where we need to move into the trade. And this is our first initial stop. Then as we are into the trade, we will raise our stop, after every new pivot low. And this is where you will get stopped out. And, if you can just analyze, we have captured a very decent number of points in this trade. Okay, so we have another very interesting trade setup here. So if you analyze what is happening on the daily time frame, we have a price action which is little bit extended from its 20-period moving average. So whenever you have a moving average and when you have prices which is which got a little bit extended from it, that tells us that now we have a support way down below. And if prices will start to move down, then there will be nothing which can stop prices to move down further, which means that we have a void here, right? So what is a void? Void simply means that when you have a momentum move to the upside, or let's say prices were consolidating and then you have a big gap up. So such kind of moves often leaves the void to the other side. So in case of an uptrend or a gap up, we get a void to the downside. Void means that there is nothing there, no price action which can stop the prices moving down. In simple words, it means that there is no support here, no demand zone here, which will work as a safety net when prices will start to, fall, which is what we have here. And that you can see from the difference between the prices and the moving average here. And this is where this indicator, comes as a handy tool, because it gives us a picture, it throws out the picture which you can analyze very quickly without wasting much of a time. So we have, a very momentum move here, and it got a little bit extended from its base. So we have the minor support here, we have a gap here, right? And then we have this bar, which has given a shock element to this uptrend. Why shock? Because it is a mini breakout which has cleared this, 2 day of consolidation. but then it eventually got sold into, and we have a topping tail bar here. The next day is a follow through of this topping tail. We have moved down. Then we have a gap down, which reverses back up. Now, this bar again has given some kind of hope to the bulls that still, some steam is left in this market, and prices might again, resume its trend to the upside. Then we have this candle, which opened here, moved back up, and when it was here, it was a complete green bar, right? So, which means that many traders, numerous traders have jumped on to buy this market, but then eventually it all got sold into, and we have a range expansion and topping tail bar. So again, a combination of two in one candle. Right now, what we have to do as an informed trader, that we have to wait for the right setup. Then we have a gap down day. Right now, this is what is pretty much there on the cards. This is what is expected after such a range expansion and topping tail, because now we know that there was a distribution which was going on at these highs. Now, what we need to do here is, let's jump on to the 2-minute time frame and wait for the right setup. Now, as I mentioned that breakouts or breakdowns and gaps, they both are they both represent different scenarios, and so they throw a different picture on the chart. Now, in case of a gap down, and when you know that it is a gap down which is going, which will move in its direction to the downside, because we have prices extended from its base, from its support. We do not have any support here. Let me just clean this up. We know that there is no support that will stop this gap down to move below, right, until it found a support here. And due to this information, we can directly short this market after the first 5-minute candle, right? So this is the first 5-minute candle. We can just place the trade below it after this bar gets completed. Never take the trade when the bar is forming. Always wait for the candle, the signal candle to close, and once it gets closed, and once you have the enough information in your hand, only then place the trade. So we will enter into this trade after below this, at the low of this first 5-minute candle. Now we can place our initial stop here, or even above this 5-minute candle, as we feel comfortable, and based upon your risk management and your trading count size, you can put the initial stop here. Now, once you are into the trade, and once the prices will start to move down into your direction, you can simply trail your stops. So what you will do, you will put it here, you can trail it here, keep your stop here, then you can keep it here, and probably this is where you will get stopped out, right? So still you will capture maybe not so great price number of points, but still you are in a profitable trade here. All right, so with that, we have come to the end of this presentation. Hope you have enjoyed it. As always, if you have any questions, please ask down below in the comment box. If you are learning from these videos, if you are really gaining something out of these videos, please give it a thumbs up, please subscribe to the channel, and please do share the channel with your friends and family. So let's catch you in the next session. Take care. Bye-bye.